Today, we're focusing on a crucial turning point in the Tesla story, a strategic improvement that's igniting the financial markets. This in-depth video will explore why the Tesla of electric cars is switching from a cell to a hold. Is this only a hiccup, or are things on the Tesla track about to take a significant turn? Come along with us as we traverse the complex market forecast lane. We're breaking into Tesla's success, from the Model 3 and my upgrades to the risky dance of stocks and shares. And of course, what's a Tesla story without a dash of Elon Musk's visionary movements? We're also discussing Tesla's audacious plans and the always changing landscape of the auto business. As Tesla speeds towards a future that promises to be everything but average, we're looking inside the hood of Musk's grand scheme. But before we do, make sure to press that like button and the subscribe button. Greetings and welcome to Tesla Hype. Let's get started. According to our most recent study, Tesla Inc. is undergoing a thrilling upgrading from a sell to a hold. Here's some interesting news for those of you aficionados who have been following the auto business, especially in the second half of 2023. The company is expected to outperform its peers in Q4 2023 and the first half of 2024 due to the anticipated upgrades in its Model 3 and Y. This shift in perspective marks a significant turn. Given the previous concerns surrounding Tesla's strategy to slash prices amidst rising interest rates and the decline in demand, the plan to save costs is expected to be implemented in the upcoming year. Let's move on to Tesla's Q3 2023 earnings, which are eagerly awaited on October 18th. Delve deeper into the complex web of factors influencing this pivotal moment for Tesla. There's more to the next earnings report than just a bunch of statistics. It's an illustration of Tesla's tenacity and maneuvering during a time of difficulties and changes. It is hoped that these outcomes will serve as a telltale indicator of the effects of Tesla's recent factory closures and strategic price reductions, the changing risk-reward equation for Tesla's stock as we look into the latter half of 2023 and into the early months of 2024 during the Q2 2023 earnings call is what makes this particular turning point, especially noteworthy. In order to implement a variety of factory upgrades, Tesla's management revealed an anticipated decline in Q3 production. These upgrades are essential for improving production capacity and efficiency and laying the foundation for future advancements in Tesla's manufacturing. The improvements are not just routine maintenance tasks. Advantages, it's important to consider Tesla's journey overall, as the business is still firmly on schedule to meet its lofty goals despite this little pause. 1.8 million vehicles are to be delivered this year. Despite being difficult, this goal highlights Tesla's dedication to increasing production and satisfying the growing demand for electric vehicles. In this regard, current production and delivery figures, while somewhat behind Wall Street's projections, show that the corporation is handling difficult situations with remarkable adaptability. The 43,559 delivery drop, or 7 from quarter-to-quarter vehicles, ought to be viewed in the context of operational challenges and pressures from the world economy. Compare this to Tesla's success in the prior quarter, when it delivered 4,661 140 vehicles, exceeding forecast as well. Last quarter, Tesla showed that it could outperform market estimates, which were for 145,000 vehicles. This accomplishment served as a strong testament to Tesla's market attractiveness and operational efficiency. Even in an environment full of uncertainty, it's clear that Tesla isn't just coasting. Rather, it's strategically advancing in a sector that is continuously changing. This shows that Tesla's approach isn't just reactive. Rather, it's a tribute to its steadfast commitment to innovation and excellence. As we delve deeper into Tesla's strategy, there's an electric buzz surrounding Elon Musk's anticipated move. He's expected to ramp up an aggressive pricing strategy in the latter half of the year. But here's where it gets interesting for all you Tesla enthusiasts. The concern about profit margins is diminishing. Stay tuned as we continue to monitor Tesla's journey, a journey that promises to redefine the automotive landscape and reinforce Tesla's position as a trailblazer in the industry. Let's talk about Tesla's most recent masterstroke now that the company is making significant progress and reducing costs in the direction of a brighter 2024. Imagine the scene as Tesla continues to zoom past its competitors like Ford and Bide in the electric vehicle arena. It's not just about staying in the race, it's about leading it with innovative flair. But wait, there's more. The automotive market as a whole seems to be bracing for some turbulence thanks to the high interest rate environment and a slower recovery. The upgrades on the ever-popular Models 3 and I, despite temporarily slowing down production this quarter, are set to supercharge Tesla's delivery numbers in the final quarter of 2023. While pace in China is still increasing, Tesla looks to be headed in a different direction with its latest vehicle update. Not only is it ready to take on these challenges head on, but it is also predicted to surpass overall automotive market in Q4 2023 and the first half of 2024. Looking at Tesla's financial situation is like looking at a high-performance sports car. While Tesla's stock continues to command a premium, it's important to note an emerging trend, a shift towards a more balanced risk-reward scenario as we head into 2024. For those of you considering a dive into Tesla stocks right now, it may feel enticing, but not quite like catching a shooting star. Sleek, desirable, but admittedly on the pricier side. Now let's examine some data within reach to get a more accurate picture from a price to earnings P perspective. When it comes to price to sales ratio, Tesla is cruising at a whopping 7.8 times its expected 2023 sales, dwarfing the peer group average of 3.6 times.
Right.
This means that as a shrewd investor watching this unfold, it might be wise to watch from the sidelines for the time being. It's like waiting for the right moment to get behind the wheel of a Tesla. You want to make sure it's the right time. Keep your eyes on the road, or in this case, the stock, as Tesla continues its high-speed journey in the market. Stay tuned as we keep you informed about when it might be the right of the 45 analysts that are closely monitoring every move of Tesla's stock. Cautiously pessimistic mood is represented below. Now, let's talk numbers, which usually tell an interesting story. 18 analysts are confidently recommending a buy, while 20 are taking a more cautious approach and holding their cards close with a hold rating. The remaining analysts are raising an alarm and suggesting a sell at $252 a share. Tesla's stock is currently reflecting a mixed picture of investor sentiment and market expectations that are rising. The average sell side pricing, the target price of 265, indicates a slight potential rise of 5. However, the story thickens as the mean price rises. Target at 237 suggests a roughly 6 possible decline. This depicts a stock at a crossroads with several routes for you, the viewers, to consider. Keeping an eye on Tesla's stock is like to watching a thrilling, action-packed film. While assessment for the auto sector as a whole remains cautious, particularly in the second half of 2023, owing to anticipated market corrections, each analyst's perspective adds a fresh dimension that makes the narrative even more appealing. Looking ahead, especially into Q4 2023 and the first half of 2024, Tesla seems to be on a different track under Elon Musk's visionary leadership. The company is expected to surpass its industry peers. It's like a sturdy ship navigating through rough seas more definitely than others. The rationale for this hopeful Elon Musk, the company's CEO, deserves a lot of the credit for his strategic actions. His methodology, specifically concerning pricing, bears comparison to that of a grandmaster in a game of chess, where every move is a component of a more comprehensive and deliberate plan. Like a chess player sacrificing a piece for a more advantageous position on the board, Musk's decision to employ a price decrease plan is a multi-dimensional method that might serve several reasons. It goes beyond simple competitive pricing, increasing the commercial appeal of Tesla automobiles, upsetting rivals, and maybe accelerating the growth of the electric car industry. Overall, the larger context in which these price reductions are being done in the electric car sector should be taken into consideration in order to fully understand the depth of this strategy. Pricing is a crucial component that can affect customer adoption rates by lowering prices. Additionally, Musk's strategy appears to be a reaction to the current state of the economy as consumers become more price sensitive during uncertain economic times. Not only is Tesla opening up the market to a wider audience, but it is also creating a precedent that may lead to a wider acceptance and integration of EV technology in daily life. Tesla's price reductions could be interpreted as a calculated reaction to the sensitivity, making the brand more enticing and affordable for customers who may be reassessing their spending priorities. At cutting prices, this action also affects Tesla's competitors. This is comparable to a chess player making a move that pushes the opponent into a defensive position and gains an advantage. Tesla may force other manufacturers to follow suit, creating a more competitive market. Further taking into account the effect on Tesla's market share, lower prices may result in higher sales volumes, which may help Tesla maintain or even increase its market share in the competitive electric vehicle space. Now, this is similar to a chess player expanding their control over the board to position themselves for future strategic victories. Now, you may be wondering about the profit margins, which is a legitimate concern. Tesla's ambitious cost reduction plan, scheduled for 2024, seems likely to counteract the anticipated margin contraction. Imagine Tesla as a high-tech machine, constantly fine-tuning its mechanisms to enhance output and efficiency for you, our viewers. This upgrade to a hold represents a moment of equilibrium in Tesla's journey. We've traveled through the highs and lows of Tesla's journey thus far, concentrating on Elon Musk's strategic decisions and how they might affect the company going forward. What are your thoughts on Tesla's current strategy? Do you think the price reductions and model upgrades will strengthen Tesla's position in the market? How do you see Tesla adapting to the challenges and opportunities in the fiercely competitive world of electric vehicles? Please share your thoughts in the comments section below. Thank you for watching, and we hope to see you again in our next videos. Thank you for your support.